Hello trader, welcome back to my channel. That's quick weekly review of Forex for the previous week and the coming up week. Today is the 6th of June 2020. A quick look at the heat map of coronavirus and well, about 6 million 77 infected, almost 400,000 death. Recovery 2,700,000, just started getting better, but the fact is still there. Still have coronavirus out there, and UK open for business, US open for business. Most of Europe actually open for business again, and China, of course, has started open for business as they start. Uh, just the recovery basically. So that was quick look at here the coronavirus. I know that government open and everything, but still the case still stand. There is risk out there, so be careful when you react or communicate with other people around you if you're working or you're buying stuff and so on and so forth. Quick look here at the heat map of the stock market. Stock market, of course, on Friday show really strong momentum up. Non-farm payroll, it was better. It was okay, and that's why we saw S&P 500 kind of spiking up. So overall, we see about 85% green on the screen. That's still about 15% down on stock, but that's still really, in my opinion, I think this is not really. It is stronger move. It is stronger move. Indeed, it is. I did trade it on Friday. Did make money out of it, but still, I was skeptic. I'm kind of like, I think that's going to drop very soon, big time. Whoever buying is not going to stay forever in the market. I think it's going to exit in a special and certain point. We're close to the top all-time highs by I think about 200, maybe less than 200 point on S&P 500. We'll go later on S&P 500. As you can see that on the weekly 1 week performance, we look like above the 60% here, just visually. Forex itself, we see that New Zealand looking good, CAD as well, and as a pound. As I talked about pound, it was showing some momentum. Euro just right um, there. I mean, like just dropped. That Friday actually performance. Okay, so that's against dollar as well. So we see that stock risk on, risk off currency, risk on currency, and off they are down. That's mean one risk on trend. Let's see how far it will go. Don't just keep buying every single day. I think it's going to be a lot of bullbacks and some resistance coming on the way. So we'll quickly look at the index. The indexes here. We see that pound here just kind of make a nice bottom here. We break out of this range once, twice, come back 50% of this range, and we'll come back again. We'll break the high and we stayed there. We didn't really drop from there. So we close outside this resistance level, this box here, basically consolidation here. So broke out of it, come back in the following couple days, pullback, very natural momentum. That was your trigger, is to see whether or not we're actually going to continue to the way all way down. We didn't. We just stopped there. We opened with a gap and we'll continue up the following day, which was Friday. Euro giving back, as you can see. Dollar index shows some momentum on Friday. I told you that on my last video. Thursday, and I didn't do any way video on Friday because I was going to do today the bigger video. So anyway, so Euro looks like found some resistance up there. So what we're looking for now, we're looking for support coming to 20 moving average. If that's the case, then we'll see some bounce coming up next week, and we'll see another push back up, three pushes. So I have one here, two, and we're looking for the third one up, right? Dollar, you can see dollar going down. However, we see both of them, they're actually down on the day. Dollar down itself because dollar was acting as safe haven when the stock going down, but the stock going up now. So dollar giving back the gain it was taken when we see that risk off and on. When risk off situation, we see that dollar getting strong. Risk on situation, dollar getting weaker. You only the way to play dollar. I'll normally play dollar with pound and euro. That's the best two pairs to trade dollar itself. If you from Asia, if you trade Asia session, you could trade the Aussie and New Zealand and yen against the dollar. But yen is really, I don't really trade the dollar yen together. It's quite risky and it's at the head of the of any momentum. So if you want to trade something slow a little bit, maybe euro, dollar Aussie and New Zealand. Even New Zealand is very strong as well when you move. As you can see, New Zealand just keep pushing up, which is great. As you can see here, yen break out of this consolidation is mirror to dollar index. So if you look at it, it's looking similar to dollar index when you go later on to look at it. You see that we broke even that level and we keep going. So what we're looking for, we're looking for a pullback to 20 moving average. Then we'll continue one more leg down, one leg, two, maybe three legs, but we'll see how that's gonna go anyway. I don't think yen is gonna keep going down because if we come back up and S&P 500 will kind of like come back to January highs, which is all-time highs. We're about 200 point away from this all-time highs. So not sure what's going to happen from there, but it's a tricky market at the moment. Economy and price action, they kind of like, price action looks good. Economy is still really, we did a lot of people lost a lot of money, a lot of business been bankrupted and all the stuff. What's pushing the market up is the Fed kind of keep printing money and they keep simulating the economy. But don't forget this is a big bubble, and when the time comes, they cannot handle it anymore. It will explode. When it does, it's going to be crash. So it's stages. So of course the market is going to go up because there's the money flying in the stock. They supporting the stock with the money they keep printing. That's natural. And your job is to take advantage of the situation. I did yesterday and the day before, and every time I go, the market go in one direction, I will take the direction, even if I'm wrong in my analysis. If I'm wrong in my analysis, I just follow the market. I don't care about myself. I only care where the market going, and I will trade what I see, not what I think. What I think. So just keep in mind that it is still kind of bubble. So let's look here to New Zealand. We'll break out of this level. We'll come back to the 20 moving average. It was U support here, and we'll keep accelerating up by climax. And you can see that 1, 2, 3, 4, 5 days momentum up, really strong momentum on New Zealand. Just look for any small pullback. It's not going to be a very big one unless something keep going down to the 20 moving average. 20 moving average is going to be your border to kind of like make a decision of. But shorten it, you're taking a risk, but longing it is okay because we break out of a very strong range here and we test it and we just continue back up. So I'll be looking for small, like 32% of this move from here to up there, just to clear this out. From here to there, to the breakout point, and that will be looking at least here or here, or maybe 20 moving average will come around it and will be a good momentum up. Swiss is going down, we broke that level and we'll retest it again quickly on the same following day, the breakout, and we keep going down. So I think it's going to be hugging the 20 moving average. It's not going to too far, just until anything changes, then probably we'll see some breakout up. Aussie, you can see Aussie is moving as well up because of the stock, of course. It's taking the side of the stock, and that's why Aussie is up, but it kind of like stuck to here, unlike New Zealand. New Zealand 1, 2, 3 last 3 days is actually pushing up, but last 3 days in Aussie we're kind of stuck to here now. So just stay tuned for that. I mean, like don't try to trade Aussie now because I think Aussie's been topped up. If we go all the way back here, there's a strong 3 level broken. So probably going to see some test back to the 20 moving average, and we maybe will continue back up. It's very strong momentum up is following the stock, hugging the stock momentum as much as it's not as much as New Zealand. If you see that the kind of V shape, so probably going to see here small, maybe medium pullback or small, or it's gonna be like the ABC, and after that we'll start to break up again. We're gonna do something similar to this, or maybe we're gonna do another um, consolidation level like this one, pull flag. Here we strongly up, consolidate a little bit, feel it a break lower, then we'll continue back up again. Probably gonna do something similar to it. Let's see if it's gonna be successful or not. Something similar to this. Market always move in waves, and if it's going one direction, you should follow the direction until otherwise it changed the direction. So just don't trade what you think, trade what you see. If you guys are new to the channel, please subscribe and like and leave a comment. So support the channel. I'm making videos every day, but except yesterday I didn't do one because I was gonna do one overnight, but I get busy on Friday, take a break from the whole week. So also the best time actually to trade and look for good opportunities is a 4 hour, guys. If you working full-time worker, you look at the 4 hours. What the point of it? You look at the first after 4 hour close. You come back 2 hours later. You look where the 4 hour behaving, and you go down to the low time frame quickly. See who's in control. Then you can make your mind up. If it's come near the 20 moving average in 4 hours, then there's going to be some consolidation or reaction to the 20 moving average, and you can see it clearly on 15-minute and 1 hour. But 4 hour is going to be your main driver, and 1 hour and 15 minutes is your entry. Could be sometimes the 5 minutes is as well as good, and it's give you better price. So if you look at oil, same story going here. CAD and oil basically kind of consolidate here for now. Holding 20 moving average nicely. We have it once a year. We'll have it one time here, and the third time, 3 times, and we'll have one push, two, three. So let's see what's happening here. I think it's going to be sideways a little bit. If we fail to break lower, then we'll continue back up again. Economy coming back in business, or CAD is going to take advantage of oil strength. Still, I think oil you should not should, but we have a very strong momentum up. Probably going to see some pullback and profit taken is not like for 100% it will go the direction I'm talking about. Look at the chart now, S&P 500. As you can see that we hit on Friday, that's 32,010.50. That's where nowhere. I mean, like that's resistant here, and that's the high here. Is very tiny. I mean, like above this one, not much, but overall this level here, that's gonna be maybe stronger. First line of resistance. Then after that, this one here. We'll see how go next week. Next week, what's going to happen? Let's see. But you can see the momentum from the bottom here. Waves is kind of moving in waves. Start to losing a little bit, but kind of hold here. And it's just nearly above the 20 moving average. The 20 moving average is holding very nicely here. Here, we'll break 20 moving average probably. The 200. I don't have 200 here, but it's maybe just a hold in this level here. That's the first touch of it, of course. It's the second touch. So probably going to be the third one. Let's see. Maybe that's going to happen in the coming days. Then maybe we'll push back more higher. Try to break this level. So yeah, I mean the momentum is up. We have a few good days here, green, right? And it looks start to be stabilized in volatility inside the day, except the Friday it was strong. If you notice that there was one day here, strong momentum. Let me change the colors, it's a little bit confusing. Make it black. Um, this candle here, the strong momentum up, and that's one on Friday that was on a news event. That's why we see more volatility. But we can see that kind of stuck here for a while, then come back, retest the breakout, and we kind of waiting, and we break higher, probably retest again, and we'll see what's happening next. But you only trade what you see. If I normally trade 5 minute and S&P 500, do 5 minute only. I don't go between 1 minute and 5 minute. So my strategy is to identify a level and a flag. This is a flag. That's a bull flag. We'll break above it. We'll come back, retest it. Come back, retest the breaking point. Then from there, you can just enter position up there or the next candle. The previous candle, higher than the previous candle, you enter that and you leave your stop loss somewhere around here. Then you will target maybe 2 to 1. It depends. I will normally target the previous highs. You get it out. Then after that, we kind of come 50%. from the breakout. That's the breakout level. That's the high, and that's the breakout level, 50% around it, and you re-enter again. I will be entering at the following candle because this is looking like reversal. Inside the candle itself is going to be 1 minute, and inside 1 minute you will see more details how to get to enter your positions. If you go to 1 minute here, see that the kind of standby waiting, there's not much volatility. 1 minute is very tiny. Then after that, you see that momentum start building up here. They probably I entered somewhere around here. I don't remember exact price, but I don't normally don't look to the price. I only look to the chart, how the chart behaving, and everything is set automatically for me. So I click when I do a buy, stop loss already calculated and take profit is already calculated in point. I don't look to the price. I'm right here. I know only where is my resistance and support, and the level of the pivot point is all drawn. Is not on this chart. It's on Sierra. I'm using Sierra chart to trade futures, but I use MT4 to trade forex. So it's available in MT4 as well, but I prefer future because it's the spread is nothing. Just the very next price available is not. There's no much of a spread. It's just a big commission, and it's better to do it that way. It's more direct to the market. Is real price, unlike forex. So as you can see that on the 1 minute, we kind of make a solid ground here, kind of like okay, looks like a pullback. Your area of interest is 20 moving average. Is keep hugging the 20 moving average, keep going up. Then after that, start to consolidate around the 20 moving average. Now become average price below it and above it until we break out of it. And you can see that we start holding above it. Then you know that is okay. We're building momentum and we're going back up again. There you go. Probably you don't stay in the market a little more longer than that. So that's S&P 500, and that's where we are now. Economy coming back in business, going back in business, and everything looks like it's gonna be normal. But remember that, don't forget the 88 Fibonacci level is very tricky one. That's the middle of this range. So around there probably is going to be some resistance. Maybe that could be pushback V, and maybe another wave. Then we'll continue back up. Continue back up. It will be triggered when we have a cure to coronavirus and the cases start to go down more. So the bigger kicker will be, the kicker is more to it. I mean, like go above the all-time highs in the coming days, weeks. It will be that when they find the vaccine or cure for coronavirus. Other than that, I think that's gonna be maybe some like no decision at this point because we're still at risk. So yeah, just remember that we're at risk still. We're not out of the wood yet because we still have coronavirus. But the different, because if that, maybe they know something. Maybe the investors, whoever injecting the money in the market, and they normally there's algos. There's no human being like me sitting on a computer trading hundreds and thousands of trades every minute. That's the algos, and this algos been fed by human being. Say, okay, if the news come up like this, do that. If any tweet or anything happen like this, they convert it by using programming language and convert it to command. And command will be trigger strategy number 201. 201 could be like risk off, get me out of the position. Risk on is all this set of cases and strategies is been just standby and is been triggered by artificial intelligence, not automatically artificial intelligence. There's nothing actually at this time or at this moment is called artificial intelligence. Is actually there. Is only general name. Artificial intelligence should be self sufficient machine, decide every single thing, mimic a human being basically, not emotionally but action. So machine learning itself is the cases, and I'm working on that field now. I'm trying to automate my system, and I'm trying to do more trade with less risk because I like the idea because the market does move all the time. I don't want to be like, okay, if I'm buying here and I've got one order I'll be quick. This is not really the topic, but I will be quickly about it. For example, that day here I brought and I maybe exit here, but I exit too early. So I wanted to automate my system to be enter in and out, and the next opportunity in and out, in and out, in and out all day. If it goes down, go down. If it go up, go up. And that will be require a lot of back testing and building strategy and make it like a neural networking and make my computer decide where we go from here, if it's just a positive, negative, and all the stuff. So I'm learning the stuff at the moment, and I'll be let you know how it's going, and trying to build a system to be automatically trading. Because sometime if I just exit my trade, I've got a phone call and I'm talking to someone, I'm turn around and look again. I missed my move again. So it is automatic trading or algorithm is actually the future, and I can't tell you that most of the banks, because you remember that I say 95% of trades I fail because the emotion involved. Okay, but I'm not. I have my stop loss and take profit, but I want a more dynamic action. Okay, so if that's going against me, I'll go to decide quickly. That's okay. Exit that. I don't need to wait to hit my stop loss and change gears, go for short instead. And that happened very very quick by using algorithm, but it's not going to be very quick by my decision. It'll be like lagging. It'll be like by the time I make a decision, the already move already hit, and everything just happen quickly. So it's worth it, and make more sense to automate your trading strategy and make it just train it to do the best. You're not going to be like JP Morgan or these guys. These guys are using all banks. They're using algorithm. Yeah, they use algorithm in the long term, in the short term. They use all kind of types, and they backtest 24/7 all the data every single day. And the next day is going to be better. Imagine that's 350 days in a year they doing this, but next year they'll become better and better. And you can see it in the market. There's a lot of movement happen very quick, very 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 quick, and big money flying into the market. It's not human being just put millions and millions of dollars to trade. No, it's algorithm. Okay, enough of algorithm. Let's just move on. So gold, you see that gold broke below here. We were talking about 4 hours. Did we? Yeah. Look that we come back here and we maybe we touch the bottom. Not yet. So see that gold will come back inside of about 50% of the channel itself. We're right there. We kind of stopped here. We went further down and we come back up again. Gold looks okay. You know, is a good place to buy around $1,600. Probably gonna see is not far from the breakout. We'll basically almost closed the gap here. There's a gap here from the breakout, but the main breakout here is not closed yet here. So we kind of like we build the momentum. So far, what we did, that's the one here, major move. We'll complete a major move. Let's see if it's gonna have another third one or not. So ultimately, this is the breakout. We'll have one push down, looking for another one, maybe another one down. If S&P 500 indeed want to go up again to all-time highs. However, gold is still holding because we are in really high level here. We on the daily we are just testing this level again. Okay, if you think about it, if I just get this, hold on, let's see. If you do that, if you just highlight this level, what we did, we tested twice, third time we went inside and we're still above it. Okay, we'll have a failure to break higher, come back 50%, and come back again to retest that level. What will give us here? Will give us 1, 2, 3, 4. We're looking for another pushback and another leg down, probably around this level. So that will be the next one, in my opinion. I think that will be the next level to try to challenge. So if I put these guys here, that level is a failure. So for me, that's with a failure to break higher, and I can hold for a while, come back 50% in the middle here, and come back up again and break below it. And we hold at the bottom now of this support right now. I mean, when we close at it here, right there. So what happened from there? Maybe a few days, couple of days pullback, a little bit here, then probably going to see a major move. So I'm looking for a major move here. If that's going to be successful or failure, So if you come back up here and it refuse to go down, I mean like give you a wick or whatever inside the day, 4 hours and hourly. So we'll be looking for push back up, either way, down or up. If you come down, my expectation will be another major move, which is come to this support, 1644. And if he refuse to go down, I mean like if he's become a failure to go down, and you will know it from the other, like how the dollar doing and all stuff. Then we'll be looking for one more push up, at least here. Then maybe just is gonna stay sideways for a while here. Happened before. Look at that sideways. Try to break higher, couldn't come back down. Still, investors thinking that the stock is not gonna last for this highs. I think is going to be the second wave. Everyone's thinking there's gonna be second wave, and that's why there's going to be a second wave of coronavirus. I mean, and that's why there's still money in the market and they're still buying at these levels. I mean, this is great level. Look at that. I'm looking on the daily. We hold here a nice support level. Let's see how it's going to act. I like to see a stronger momentum up another day here. Maybe I will buy on any 50% of that day, pull back to do me major move in 4 hours. So let's see. One push back down. We'll have 8 hours here. Okay, if you look here, 8 hours. We just at the close of the previous 8 hours. So we have 8 hours basically at the same level, at the same price. So it's like a holding. There's no buyer, no seller wanna sell it now, no buyer wanna buy now. So until one of them to make a big decision, then we will jump with them in the train. Other than that, just stand by, don't trade anything because we're at the bottom or at the strong support here. Okay. Bitcoin. Told you guys about Bitcoin the other day. Said that let's see how the pullback will play. Looks like we're successful, but the following day we have a momentum on hold at the moment. No decision, no strong momentum up or down yet. Remember that the 20 moving average just below, not above. So the probability is possibly, maybe we'll come back up here for another leg, then we will see strong momentum down. So whoever brought, they exit at this candle, they exit at this candle. Maybe they're waiting for another push up higher. We have 1, 2, 3 pushes, then probably come back down. Oil coming close to the 61%. And remember that, guys, I told you that possibly is going to go down from here last week, but it didn't work out. You see that I'm breaking up. So if you have followed me blindly, then you probably be lost in money now. But if you use your logic to trade what you see, not what you think, because there always possibility of breakout and successful one. How you know that? The momentum inside the candle, the lower time frame candle, the 5 minute and 10 minute. If you see the bulls more stronger than bears in the low time frame, then that will indicating that this momentum will continue. But it's not going to be forever. It's not going to be up there. No, it's going to be like somewhere you mark it like, okay, the 61 Fibonacci. A lot of trader, they keep their eye on this. So probably by opening the market tomorrow night, probably going to see some pullback again and we'll continue back up. You see this one here? I'd like to see another one here. So far what we did, a major move, and that could be the third one. So maybe I'm not push back up, come back down, and maybe we're looking for the third push. So far we did break out of this level. I have one, give you small pullback. I'm looking for a two, another small back. Maybe we'll go for a third one. Maybe we'll go above the 61, maybe 44 will in play. Remember that when it was zero, I told you guys 44 it will come because it was very cheap, very strong bounce, and pullback probably happen in the next few months. And also remember that we are in the second half of the year now, and that's the third. We are inside the third quarter, so Q3, and yeah, if everything back to normal, oil will go up because people demanding oil, petrol, diesel, and all the stuff, So all the stuff required to, so the market is moving up. So remember that as well. But maybe we'll see some small pullbacks to continue back, at least from the breakout, 20 moving average. That's will be your level of buying just before the 20 moving average, not right on it. If you have a good software like myself, Sierra, I will show you more better. Maybe trading view is not that clear. and they give you some delayed, because this is sometimes they give you delay. If a feature is giving you delay 5 minutes, so you have to have you can find out oil contract feature through maybe MT4. Maybe some of the MT4 broker that provide real-time data or feed. Here you go. We're looking at dollar index. So dollar index, guys, I told you that we're going to see some pullback pushed, and probably another pullback here. We really like to retest this level again, then 98, and probably from there we'll be looking for a major move from the breakout. Let's see, around maybe 50% of here, and we'll come back down here again. So maybe we see some momentum back up to this level, at least here. I cannot tell you exactly what the price is going to be. Maybe it's going to continue. So 20 moving average will come nearby when the prices start to come to the near the moving average. Then probably going to see some reaction, probably another leg down. Okay, moving on quickly. Euro, of course, euro we have like 1, 2, 3, 4, 5, 6, 7, 8 consecutive days green, and Friday, of course, it was pullback, which is a cool one. Dollar looked like it's start to give some momentum, but still, remember that I talked about this day. It looks similar, but this momentum is really strong. So that could be only one day pullback. Maybe Monday what will happen will continue back up, or Sunday night. The momentum is very strong. We broke out of a very big range, and that also to do with the dollar index itself, and is a mirror to euro dollar. So you need to look for a trade. Probably we're gonna come back at least around this level. If you want a short term, you can trade it there. Then you wait for another confirmation. Then maybe you just start to trade on the breakout. If you notice that I don't talk about price, because price is not really important to me. What's important is the price action, the candle, where it's going. So that's level. If interest break out of it, then I will be trading that. My target could be around the following candles showing momentum, showing some volatility area, like these levels here. You could enter you don't have to wait for the top, because by the time come to it, you could have done so much. You could have done so much trade in and out, in and out, in and out, and that's why algos. That's what algo does: in and out, in and out, in and out. Instead of making 100 bips in a matter of 6 days, you could have make 1,000 bips in a matter of 6 days. You see, is triple your profit, plus is not going to risk too much, because that's your strategy, that's your own strategy, and obviously that's your full time or for part time. Part time, of course, you're gonna have a very light strategy, maybe 5 trades a day. If you're full time, probably gonna do 100 trades a day, and you need to spread your risk across the market. There's so many strategies, guys, because there's a risk off and risk on currencies. If it's risk off start to showing up, risk on the risk of currency will be strong, and vice versa. So you have to study the market, and you need to have a lot of plans, and stuff is not that simple. It's not only candlestick and price action. There's a lot of stuff around it. Like it's not only BMW cars in the street. No, there's a traffic light. There is a system in the street. There is a tire pressure, all the stuff. Same thing. So your system need to be complete by other surfaces like news, like fact, like history, back in history telling you risk off and risk on currencies, and it does indeed work out. So that's how banks and big investors they do money. Also, you see here pound just pulled back here. You see we just touched this level finally. Very nice. Pound CAD, pound USD cable. We broke above this level. Remember, we broke here. If you go to the lower time frame, we see that we break out and we retesting. So that basically break out or retesting. We didn't really lose down big. It didn't really drop or rejected. We're still inside there. We're still inside there. That's a great opportunity I talked about many times. I was trading it from here, even from there, and I exit and re-enter again a breakout. You see that breakout, lovely breakout, strong momentum, come back, retest it, stay around the 20 moving average, then break above again, retest the moving average again. So many opportunity. Keep going up, come back, retest the 20 moving average. What happened next? Keep going up. Maybe we're going to do the same. By the time we do the same, moving average come around, then we'll break high again. Pound looking strong against the dollar, and that's what the pretty thing about 24 hour candlestick is giving you a very good momentum. And I love the 4 hours more than anything because 4 hours I can see, okay, that's great. For example, here, look, that's really lovely, looks good. So we went up, come back. We didn't really want to break lower. For another 8 hours, we're still there. Well, we'll buy above this candle. Okay, that's lovely. I will buy above this candle, and I will leave my stop loss down there, and 2 to 1 maybe around this level if I want to wait for it, or this level. It depends. That's the big candle. It looks like inside sessions. So before the session started, it's showing you momentum. Look at this one. Started fading away. Okay, that looks like a pullback. A, B, C. Like that. Hold here, come back down, make a swing low, come back up, make a swing high, come back down, make a swing low, consolidate a little bit, break out of the 20 moving average, test it, and break out of this candle. That's your trade. What's next? This one. That's what algos does. That's what computer does. They always highlight these guys here. For example, if I'm a program, I'll be just before that. Okay, that's my exit. Okay, there's another one here. That's my exit. If you look left, you highlight all this level, another level here. Let's see, the close or the highs. Here we go. Doesn't matter, but it does come to your price. If from the breakout, big one, then you go to level 2. Look at that, we break out of this level. Great, retest it. I'm entering above this wick. That's it. My stop loss is going to be below the wick. The 4 hour close, I put my order and I take my profit here, or maybe the next level. I see the strong momentum, really strong. I could just take profit 2, profit 3. But you see that what happened here? If you hold for it, you see that start breaking down, come back, quickly retest. Buyers, whoever enter here, so algos that enter here and they waited for all this time, and as soon as they come, they realize it's not going up again for now. So what they did, they pushed the market all the way up to they enter to exit break even plus the money they add to, and they exit all together, and that's why we see that wick. And the wick come back down, pull back, and whoever was waiting here to enter again, that's a second chance. So push back up, come back down, and continue. See, the momentum is very strong. I love this pattern. Breakout, stronger momentum, come back all the way down to the breakout, and come back up again, very, very strong. That's a lot of technique, a lot of strategy, but this is really 4 hours is really great. 4 hours is below 1 day. 4 hours is most of algorithm looking at it, most of the trader, most of the banks, they're always looking how strong is the 4 hour does. When it's coming down, it's below the 20 moving average. Okay, if you start to losing momentum, that's a sell. Above the 20 moving average, you see the momentum is building is a buy. Okay, 20 moving average is the last 20 days or last 24 hours. So if you don't know what's the moving average is, the average price, I mean. Okay, so let's move on quickly. I think this video is getting long. I don't want to make it longer than that. Let's go to pound yen. Pound yen is pushing up nicely. 39. I was talking about 140, 142. So let's see if that's going to work out because we have on the left here some resistance. We just touch it and we kind of like we didn't really drop big. If S&P 500 keep going, probably the next level will be this one, 41. Then after that we will be pushing up to this level here. Okay, that's like a box of consolidation level. So probably we'll come near it, touch it first, maybe we'll pull back. Probably we're gonna keep going, come back, and start doing that until we break high again. I think Bound is going for a bull trend. It's a bull trend, guys. You see that happened before in history, and I love trading this. See this breakout from here? That's a daily. We'll come push down, come back up, bull flag. We'll break out it strongly. Let's see if it's gonna continue or not. We're looking for another major move from the breakout. So bull back possibly. Then we're looking for another major move to this one here. Right. Aussie as well. I'm gonna buy Aussie above this candle if I go down to the 4 hours. Okay, I'll be buying Aussie, pound Aussie above here. Okay, we have a nice push, 1, 2, 3, probably be bigger. I'll be exiting around this level here. Let's see how's it gonna go. But I will be buyer above this level. Let me just mark it. Um, my entry it will be around here. My oh, okay. Oh, why does that? Sorry guys, hold on. That'll be my entry. Then after that, I will be exiting just above this level here, around here. Then another one here. We are the 20 moving average, but if you go to the daily, we're a little bit far from 20 moving average. 20 moving average just around here. By the time you come to me, probably that will be my last target around the 20 moving average. Just planning ahead, projecting, but it doesn't mean I will be trading. Maybe I will exit all my profit at the first level or the second level. Okay. So that looks good. Looks like it's gonna hold here, maybe sideways before this is happening. 4 hours and 1 hour will tell me more details. So you always need to look to all time frames. Uh, New Zealand, you see, New Zealand is really strong. I mean, like, did really well from the breakout. Even if you just trade in the breakout, 335 pips in 1, 2, 3, 4 days. Very good trades. But what this level here now? If I let me get this, we are at this level now. Let's see if it's going to hold. Maybe the 20 moving average is a good place to target it. If you go down to the 4 hours, what happened 4 hours? Breakout, break. Let's see what happened. We're gonna do someone here, another one. We're still below the 20 moving average, and still New Zealand is strong. So as long as we below the 20 moving average, I'm not gonna put any trade on this one yet until we break above it, retest it, and we'll start go up. Remember that it's not gonna go straight forward. It's gonna be sub sideways and stay around hugging the 20 moving average before it's actually making its big move. So don't just give up yet, or don't trade and hold. If you think it's not the time yet, you should stay out of the market. Bound CAD, same stories. We hugged the 20 moving average on the daily. So look here, we hold this level. Okay, every time we come, it drop down, drop down, drop down, and we come near it on Friday. We touch the 20 moving average, and we popped back down, but we still really inside the previous day. We broke above it, but we didn't really break below it. We just touched the opening, and we bounced. In the low time frame, that's what happened in the low time frame. 4 hours giving you different story. The consolidation since this level, and we really get back inside this one. Looks like it was a failure. 1, 2, 3 failure to break low. 3 bottoms, in my opinion. And probably I think it's going to continue back up at least to this level. Let's see how it's going to happen here. It's not too big momentum. Remember, oil, it can keep going up, and CAD taking credit for it. So in my opinion, if both CAD and pound are strong, we're going to see some spikes here, ups and downs, until one of them giving up trades. Okay, guys, thanks very much for being here. I'm going to call it here, and please subscribe and like and leave a comment, ask me questions, and I'll be happy to answer you. And stay tuned for next week momentums. And good luck. Thanks, guys. Take care. Bye.